we are going to discuss Unit 9, which is about the documentations in global logistics. Already we have discussed the different mode of transportations, different mode of transportations in the India and outside India and in global scenario also. So today we will discuss that documentations in global logistics. In this chapter, we will discuss the introduction part of the documentation process. What are the key documents basically used in the global logistics we will discuss. Then we will discuss the dimensions of the different documents, bill of landing, international contracts, and what are the different types of contracts. And also we will discuss the international commercial terms, terminologies. And at the end of this chapter, I will discuss three small case lays in front of you to have a better understanding. So now comes to the introduction part. Documentation. Documentation plays a crucial role in global logistics, ensuring the smooth products transportation, compliance with regulations, and proper communications between the stakeholders. So export-import documentation is the soul and heart of the international business. So now the question is, why is documentation needed in export-import business? The very simple answer to this question lies in the nature of the business relationship between the exporter and the importer, who are operating from two countries. And if one is doing domestic business, one also knows or can easily know the commercial practices which bind the buyer and the seller. Similarly, the possibility of business disputes is reduced since both the buyer and the seller know or can easily know the laws governing the contracts. So for trade involving documentation for the trade involving exports is required for other regions also. This documentation work helps the exporters in claiming the incentives of all exports all around the world. So the incentives are usually claimed after goods are shipped, as proof of shipment need to be deposited at the time of claiming the incentive. Then the role of standard documentation in the export-import process can be categorized into twofold or two categories. One is the real shipment of physical goods. Other is the complementary documentary exchange. The documentary system developed the centuries ago through the transactions referred to as documentary sales under the classic shipment trade terms. One is your free on board FOB and CIF, cost, insurance and freight. Documentary. The sales have been considered by courts of law to be the transactions in documents to the same extent that they are transactions in the goods. So it is just as important for the exporter to provide the correct documentation as it is for him to provide the correct goods. So before going to the key documents, let us know what are the different key documents are there. I am just explaining. One is commercial documents. And commercial documents, within that commercial documents, there are some commercial invoice. What is that commercial invoice? It is a detailed bill listing the goods being shipped, their value, Hello, good afternoon. So documentation plays a crucial role in the global logistics and for the ensuring smooth transportation, compliance with regulations and proper communications between the stakeholders. So documentation have a major role in the global logistics. Okay, friends, sorry for the disruptions due to some technological issues. Uh, we could not connect for few seconds. So we are just discussing the key documents. And in the key documents, I was just discussing the commercial documents. Among the commercial documents, we have discussed the commercial invoice. Then another is your packing list. This is specifies the packaging details, dimensions, weight, and content descriptions. Then another document is pro forma invoice. That is a preliminary invoice sent before the actual shipment to confirm the transaction details. Another is certificate of origin, COO. This declares that country where goods are manufactured, often required for the customer clearance and preferential tariffs. So the number of documents followed for conducting the international business across the globe varies from country to country, depending upon the law and practices adopted by each of the countries that create complexity in the conduct of business. So the 10 key documents that are now globally accepted and grouped into the following categories, and some of the documents are export sales contract, purchase contract, and there are some transport documents. We can say one term you can remember, bill of landing. What is that bill of landing? We will discuss in detail, but remember one line: bill of landing is a contract between the shipper and the carrier outlining the cargo transportation. Then another is airway bill. What is that airway bill? That is similar to a bill of landing, but for air freight only. Airway bill is for air freight only. Then another is your rail and road consignment note. It is basically used for the land transportation to track the shipments. Then there are some other categories, like there are some custom documents. Within that custom documents, there are some custom declaration, some import export licenses are there, some custom bonds are there, and another category is compliance and regulatory outcomes documents. This is some for the dangerous goods declaration, DGD, health and safety certificates, insurance certificates. These are coming under compliance and regulatory documents. Another is for financial and trade documents. There is one is a letter of credit. It is basically a financial guarantee from a bank ensuring the payment upon fulfilling the trade conditions. Another is bank draft or bills of exchange. We can say it is a payment order used in international transactions. So already we know the common two documents, that is export sales contract and purchase contract. These are the documents to be raised by exporter. There are 6. One is your commercial invoice. Next is your certificate of origin, COO. Another is certificate of inspection, certificate of insurance, bill of landing, already I told, transport document, bill of exchange or draft, it is required for the financial and trade documents, that is a payment document. The bills of exchange, it is a payment order used in the international transaction basically. And there are some other category of documents to be raised by importer only. There one is your letter of credit, another is letter of import declaration. So there are 6 for exporter, 2 for importer. The 6 for exporters, the documents are like commercial invoice, certificate of origin, certificate of inspection, certificate of insurance, bill of landing, bill of exchange, etc. So after that, let us know what are the different dimensions of the documents. What are the different dimensions of the documents? For enabling the importing party to receive the goods contracted for and the exporting parties to receive the sale worth, as well as to safeguard the incentives of the export, documentation formalities are made compulsory. It is compulsory, not optional. And it is important to note that all documents relating to with the export have to abide with the commercial, lawful, and investment prerequisites. One of the important dimensions among the commercial documents includes transport documents, that is the heart and soul of conducting business. It may be national or international level, but it is the heart and soul of the conducting the business. Now, due emphasis is being paid for these 3 perspectives so that better understanding can be developed for the rationale of these different documents. And documents of transportation which are prepared under the commercial dimension, also known by the name shipping documents. And these documents allow the discharge of the responsibilities written in a contract of export by the exporter and the importer. So as per the written document terms, the exporter is abided by the rule of making shipment of the goods as per the prerequisites of the agreement, and while the importer is abided by the terms written for making the payments for the goods purchased. So for a delivery under the CIF agreements, there are certain commercial documents like sellable invoice, bill of landing, airline bill, post-lot receiving, indemnification policy, credential, unnegotiable bill. So in addition to these papers, certain shipment will also impose the supplementary sellable forms like list of packing. There are some inspection certificate, documentation of quality assurance, etc. These are the different documentations are there. And now let us discuss about what is bill of landing. A bill of landing is a receipt for goods shipped on board a vessel, signed by the person or his or her agent. It may be that particular person may sign, or his agent or her agent may sign, who contracts to carry them, and starting the condition in which the goods were delivered to the ship. It is not the actual contract, which is inferred from the action of the shipper or the ship owner in delivering or receiving the cargo, but forms excellent evidence of the terms of the contract. It is indeed a document stating the title for the goods, which is the main focus for the business deal between the purchaser and the supplier. It is the further most vital sellable paper in global trade deals and is usually used for regulating the distribution of goods transported through the sea route. And there are some salient points in a bill of landing. The salient points incorporated incorporated in a bill of lading are like the name of the shipper. Usually the exporters are the shippers. Another is the name of the carrying vessel. A full description of the cargo, which provided it is not bulk cargo, including any shipping marks, individual package numbers in the batch, fillings, cubic dimension, gross heaviness, etc. Fourth is the marks and the numbers identifying the goods. Fifth is port of shipment or dry port, that is CFS. Port of discharge or dirty port, that is also one type CFS. So these are the salient points. Another is full details of freight, including when and where it is to be paid, whether the freight paid or payable at destination. Name of consignee, or if the shipper is anxious to withhold the consignee's name and the shipper's order. Ninth is the terms of the agreement of the department, the day or time of the receipt of the goods for shipment and the time they are laden on the vessel. 11th is the name and address of the notified party, the person to be notified on arrival of the shipment, usually the buyer. Quantity of bills of lading which is signed either by the master or on his behalf by his or her agent, which provide the information about receiving of the goods. Another salient features is the signature of the ship's master, of his or her agent, and the date. These are the things must have to be included in a bill of lading. Then let us know what are the functions of bill of lading. There are broadly 4 functions of the bill of lading. It is broadly a receiving at the time of shipment of the goods, a document enabling the transfer of the goods, which enables the demand for cargo by the one who is holding it, a proof for the terms written in the agreement of appraisement but not the real agreement, and a quasi-negotiable tool. And the bill of lading is drafted and is duly signed by either the carrier or on behalf of the carrier, that is either by the master of the ship or by his or her agent. Also, it is embossed as freight paid or freight payable at destination as per the circumstances whenever goods arrive on the board. So the cargo is termed as clean bills of lading with no further endorsement whenever goods arrived are in a good condition. Bills of lading are drafted in sets and the numbers assigned varies as per the trade. Usually there is a 2 or 3, one of which will possibly be furthered directly and the additional one by a future postal in case the primary posted was misplaced or late, together with appropriate quantity of non-negotiable copies required for workplace and filing the purposes. Now comes the types of bills of lading. There are different types of bills of lading are there. One is straight bill of lading, 2-order bill of lading, shipped bill of lading, received bill of lading, groupage or master bill of lading, split bill of lading, transshipment bill of lading, through bills of lading, clean bills of lading, clause bill of lading, and stale bill of lading. These are the different types of bills of lading. Now, let us know what is airway bill. Already we know there is a airway bill. In air carriage, the transport document is known as the airway bill. And this document constitutes the prima facie evidence of the conclusion of the contract of appointment of receipt of goods and of condition of the carriage. Therefore, there are three functions are performed by this document. It is a forwarding note for the goods, a receiving for the offered goods, and a authority for obtaining the delivery of the goods. So by itself, airway bill is not a document of title, nor is this the document of transferable. However, airway bill can be made into a transferable document by which it can be transferred to a third party by endorsement like bill of lading. But by and large, the business and commercial practice does not treat airway bill as a document of the title. Clear? The purpose of airway bill are alike to the bill of lading in respect of its features as a proof of a contract and as a receiving or cargo. The airway bill can be provided as a receiving when either cargo was given to the carrier pending shipment or when the cargo is laden on panel board of the aircraft. This is known by the name like clean receiving or a closed receiving. So in general, AWB or airway bill is not a title document, but the same can be made a title document by making it as an order airway bill. It is a usual practice in the trade for getting consignee named the airway bill. So accordingly, there are things are transported to the consignee whose name is written in the AWB or airway bill. As soon as the consignee identifies himself as the same person about whom information is recorded in the airway bill, goods are delivered to him without any further delay. Okay. Now let us discuss about there is a combined and a multimodal transport document. For a multimodal movement of goods in container, a document known as combined transport document is prepared. The movement of goods is usually done by using more than one mode of transport, that is either rail or ship. To aid the procedure, the Foreign Exchange Dealers Association of India, FEDA, has also come up with brochure number 81 and 82 for facilitating easy export of goods in containers from certain stated inland hubs of India. And there is a international contracts, and there are the different types of contracts. Contracts, we can say export sales or purchase are the heart and soul in the conduct of a business. Because if any organization or business want to expand its business globally, definitely the contracts, it may be for sales or purchase, are the heart and soul in the conduct of a business. It may be nationally or internationally. In the event of any dispute, the resolution revolves on the terms and conditions contained in the contract, as this being the legal document wherein the stakeholders bind themselves. Since commercial trade laws vary from country to country, the International Chambers of Commerce, ICC, based in Paris, have taken to lead to evolve around 250 international model contracts that can be followed by all the nations depending on the nature of commercial transactions, like your export-import contract, agency contract, maintenance contract, contract manufacturing, Turkey projects, licensing, franchising contract, distribution contract, assembly contract, appointment contract, insurance contract, payment contract, etc. And the broad elements of a contract include the product or service and its description. Product specifications as regards of the quality. Then price. Then another is quantity, payment terms, delivery schedule, what is the time period, partial or complete. Another is element is mode of shipment. It may be say air, sea, road, post, or inland water, courier, internet. What is the mode? Then types of shipment. It is maybe a direct or transshipment. Another is inspection. These are the broad elements of a contract. And after that, another elements are labeling, packaging, packing and marking. Insurance, it basically for export import, it is very necessary. Documents, escalation clause, force majeure, arbitration, fines or penalties, applicability of the law. These are the different elements applicable. Now, let us know about the international commercial terms. Trade practices vary from country to country. The practices in India definitely will vary the practices of Pakistan. The practices of Japan definitely vary the practices of China. So these trade practices vary from country to country to avoid the misunderstanding resulting in disputes and litigation. International chambers of commerce Paris evolved the uniform rules for interpreting the commercial terms in 1936. Then the International Chamber of Commerce published a set of 13 rules known as the Incoterms, which were reduced to 11 in 2019, but previously it was 13. That outline the obligations of purchasers and sellers for the sale of products in cross-border transactions, which have been revised in 1953, 1967, 1976, 1980, 1990, 2000, 2010, 2019, and it became into force from 1st January 2020. So there are so many changes occurs continuously in the different phases. And what is the function of this? It is a group of standardized trade terms, 3 letters commonly used in the international contracts of sale of goods, to advise the cost of international business transaction, define the responsibilities between buyer and seller. Also, it reflects the current practice in the international trade. This is the function, these are the functions of these international contracts. Then contract of carriage. The Incoterms utilized in a transaction will dictate which party is responsible for each transportation segment and its corresponding contract of the carriage. The Incoterm that is utilized can affect the title passage in foreign trade. As a general rule, we can say pre-carriage, main carriage, on carriage should be utilized in connection with the Incoterms. And then what is pre-carriage? The 3 terms we discussed, that is pre-carriage, main carriage and on carriage. What is that pre-carriage? It is the transportation segment from the seller's location to the point where the cargo would leave from the seller's side. For an example, to arrange for pre-carriage, you would contract with an inland carrier to make delivery to a port of airport. But what is main carriage? It is the transportation segment from the seller side to the buyer side. For an example, to arrange for the main carriage, you would contract for ocean or air carriage. What is on carriage? The transportation segment from the point of arrival to the designated ultimate receiver. For an example, to arrange for on carriage, you would contract with an inland carrier, and to make a delivery from the port or airport of arrival to the ultimate receivers. So this is the one is your pre-carriage, main carriage and on carriage. So based on the mode of transport, for any mode of transport, multimodal Incoterms, there are some terms are there like EXW, that is your X works. The FCA, that is free carrier, these are the terms you have to remember. That is another is CPT, that is carriage paid to. CIP, that is carriage and insurance paid to. That is DAP, delivered at place. DPU, delivered at place unloaded. DDP, delivered duty paid. So these are the different mode or any mode of transport, that is your multimodal Incoterms. And for sea and inland waterway transport only, there are some Incoterms are there, that is FAS. Free alongside ship. Free on board is FOB. Cost and freight, that is CFR. Cost, insurance and freight, that is CIF. So these terms, please remember, what is used in the different transport documentations. So based on seller and buyer responsibilities, there is a E group, that is your departure, that is a term EXW, X works, minimum seller's responsibility is here. Another is F group, here the main carriage unpaid, that is a free carrier FCA, free alongside ship, that is FAS, free on board, that is FOB. Another is C group, that is the CFR, cost and freight, CIF, cost, insurance and freight, CPT, carriage paid to, CIP, carriage and insurance paid to. Then D group, that is arrival at destination. There are different groups are divided. DAP, delivered at place. DPU, delivered at place unloaded. DDP, delivered duty paid. These are the different terms. So after that, let us know what is the rules for domestic and international trade. Traditionally, the Incoterms rules were used for international sales contract involving the movement of goods across the borders. However, with the formation of trade blocs like European Union, cross-border regulations have significantly reduced. As a result, Incoterms 2020 are now officially applicable to both international and domestic sales contract. The obligation to comply with export-import regulations remains only where explicitly required. Two key factors have influenced this shift, and its business have increasingly used the Incoterms for the domestic sales, and the United States has largely replaced the former Uniform Commercial Code, that is UCC shipment terms, with Incoterms for the international trade. And this guidance note, this is a guidance note, each Incoterms 2020 rule is preceded by a guidance note that explains its key aspects. These notes provide the essential information, including when the rule is appropriate for the use, the point at which risk transfer from the seller to the buyer, the allocation of cost between both the parties. However, these guidance notes are not legally part of the Incoterms 2020 rules. They are intended only as a reference to help the users apply the rules effectively in the business transactions. Now, there is a electronic communication. Earlier version of Incoterms included the provision for replacing the physical documents with electronic messages. Incoterms 2020 continues to support this flexibility. If both parties agree, electronic communication such as electronic data interchange, EDI, and digital documents can be used in place of traditional paperwork. Another is insurance cover. It is another also important factor. Cost insurance and freight, CIF, carriage and insurance paid to CIP are the only Incoterms in 2020 rules that require the seller to purchase the insurance on behalf of the buyer. So under Incoterms 2010, both the CIF and CIP, cost insurance freight and carriage and insurance paid to require the insurance coverage under Institute Cargo Clause. And in Incoterms 2020, the insurance requirements for the carriage and the insurance paid to has been upgraded to Institute Cargo Clause A, which provides a broader coverage. So Clause A is typically preferred for manufactured goods, while Clause C remains more suitable for commodities under CIF, that is cost, insurance and freight. So I am repeating, Clause A is typically preferred for manufactured goods, whereas Clause C remains more suitable for the commodities under the cost, insurance and freight. Then let us know about the clearances for security issues and its related information. In nowadays global trade environment, safeguarding the goods during the transportation is a major concern. It is essential to ensure that goods do not pose risk to life or property, except for those inherent to their nature. With growing security regulations worldwide, the Incoterms 2020 now incorporates the provisions addressing the security related documentation to enhance the compliance in the global logistics. It is one of the emerging things. With the growing security regulations worldwide, the Incoterms 2020 now incorporates the provisions addressing the security related documentation, security, to enhance the compliance in the global logistics. Until there is a security, how we can enhance the compliance in global logistics? Then terminal handling charges. The cost became quite a problem with the Incoterms 2010 with some parties, and in some cases carriers were changing their pricing, so sellers were often faced with new bag charged terminal handling charges. The Incoterms 2020 now provides much more detail around the cost and now appear under the A9 by sections of the rule. This clearly states which costs are allocated to each party, which costs are allocated to each party. This is in the terminal handling charges. And another thing, what is the own means of transport? In certain Incoterms 2020 rules such as FCA, when delivery is at a non-seller's premises, DAP, DPU and DDP, the seller or the buyer can use their own transport instead of hiring a third-party carrier. This is particularly common in road transport. For an example, if a seller owns trucks and prefers not to hire a freight forwarder, then they can personally handle the transportation. However, this is only possible when the Incoterms destination and the place delivery are the same. Otherwise, it is not possible. If these locations differ, the seller may still transport the goods, but the buyer might have already assumed that risk, depending on the agreed Incoterm. There is challenge here. And there is FCA Incoterm rule. In Incoterm 2020, the FCA free carrier rule has been updated to address the situation where goods are sold under FCA free carrier but are transported by sea. Often the buyer, seller or their bank may require a bill of lading with an on-board notation. So under Article A6 by B6, the updated rule allows the parties to agree that the buyer will instruct the carrier to issue an on-board bill of lading to the seller once the goods have been loaded onto the vessels. The seller can then provide the document to the buyer upon through the banks in a letter of credit transaction. We have already discussed that letter of credit. So this revision helps to facilitate the trade finance processes, making the free carrier more practical for maritime shipments. And after discussing this, let us discuss some of the case which is relating to the different documentation process in global logistics. So friends, in case 1, this case is relating to incorrect bill of lading causes a delay. So now I am explaining the overall scenario. What happens? A company in India exports the electronic goods to a buyer in the Germany under CIF Incoterm. However, the seller mistakenly issue a receipt for shipment. That is, mistakenly it issues bill of lading instead of on-board bill of lading, which the buyer's bank rejects under the letter of credit terms. So what will be the impact? This is the scenario. Do you understand? A company in India exports some of the electronic goods to a buyer in Germany and under the CIF Incoterm. However, the seller mistakenly issues a receipt for shipment bill of lading instead of on-board bill of lading. So which the buyer's bank rejects under the letter of credit terms. So what will be the impact? The payment will be delayed. The payment is delayed. The shipment remains stuck at the destination port due to incomplete documentation. And the seller incurs additional storage cost also for this. So you know the scenario and you have already realized the impact. What is the lesson for you? And the lesson is ensuring the correct bill of lading time is crucial when dealing with letter of credit in global trade. Otherwise, this type of situation will arise. This is a small case on the incorrect bill of lading, or which causes delays. Second case, that is the missing certificate of origin blocks customs clearance. Now again please observe the scenario. It is a textile exporter in China ships garments to a retailer in Canada. The shipment is eligible for a lower tariff under a free trade agreement FTA, but the exporter forgets to include the certificate of origin with the shipment documents. So the impact is customs in Canada applies a higher tariff due to the missing of CO, certificate of origin. Another impact is the buyer pays more in duties or demands a discount from the seller. So from this scenario, what is the lesson you got? It is essential the trade documents like certificate of origin must always be provided to benefit from preferential tariff agreements. Okay, now the case 3. This case is relating to the incorrect HS code leads to heavy penalties. How the incorrect HS code leads to heavy penalties. The scenario is a US importer orders lithium-ion batteries from South Korea. The supplier incorrectly classifies them under a general electronic components. So HS code instead of the specific one for lithium-ion batteries. What is the impact? The impact is customs fines the importer for misclassification. And the shipment is delayed due to additional inspection. Because there is some inspection which is required. And for future shipments from the same supplier undergo the stricter scrutiny. So what is the lesson from this? Accurate, harmonized system. Code classification is essential to avoid the customs penalties and delay. Otherwise, you will face the penalties, you will face the time delay, everything. So the 3 cases you have already observed. So from these 3 cases, please think what is the importance of a global documentation. Because you know, documentation plays a crucial role in global logistics. It may be national or it may be international. So for ensuring the smooth transportation, compliance with the regulations and proper communication between the stakeholder, there are different type of documents we have already discussed. I am just recalling all the documents. Some are commercial documents. Anyone have remembered that? Commercial documents, under that commercial documents, one is your commercial invoice. What is that commercial invoice? It is a detailed bill of listing. It is a detailed bill listing the goods being shipped, their value, and the seller and the buyer details. Second is packing list. It specifies the packaging details, the dimensions, weight, and content descriptions. Another document is pro forma invoice. It is a preliminary invoice sent before the actual shipment to confirm the transaction details. It is a pro forma invoice. The name itself tells. And certificate of origin. And it is declares the country where goods are manufactured, often required for customs clearance and preferential tariffs. Okay, so this is about the commercial documents. Another is there are some transport documents are there, like bill of lading. Bill of lading It is a contract between the shipper and carrier outlining the cargo transportation. There is another is your airway bill. Airway bill, it is similar to a bill of lading but air freight. Next documentation is rail or road consignment note. If it is used for land transportation to track the shipments. Then next category is there are some custom documents are there, like custom declaration. It provides the detailed information on the goods for import and export clearances. Another documentation is import-export license. It is required for the restricted goods to comply with trade regulations. Then custom bond. It is a guarantee that duties and taxes will be paid on time. Okay. Next category is compliance and regulatory document. What are the compliance and regulatory document? There is a dangerous goods declaration. There is a declaration that is for dangerous goods declaration. It is needed for shipping the hazardous materials. And another is for health and safety certificates. It is required for the food, pharmaceutical industries, pharmaceuticals and other sensitive items. Basically, it is health and safety certificates is required. Next is there is an insurance certificate also. It is another document which is coming under compliance and regulatory documents. It provides the proof of coverage for goods against the damage of or loss. There are some documents which is coming under the financial and trade documents. One is letter of credit. It is a very popular term. A letter of credit is a financial guarantee from a bank ensuring the payment upon fulfilling the trade conditions. And there is another document that is bank draft or bills of exchange. It is a payment order that is used in international transaction only. Okay, so these are a recap of the different types of documents. And after discussing these three cases, you must have some idea what is the importance of documentation in the global scenario, in the global logistics also. And there is, we can say, in this documentation process, we have discussed today, from the beginning we can say what is the documentation, what is the importance of documentation, what is a contract of carriage, what is bills of lading, and there is a different types of contracts are there, and we can say there is a combined multimodal transport documents is there, airway bill is there. Most important is types of bill of lading or bill of lading. We can say a bill of lading is a receipt for goods shipped on a boat or a vessel and which is signed by the person who contracts to carry them and stating the conditions in which the goods were delivered and by the ship. It is not the actual contract which is inferred from the action of the shipper. And if the bill of lading has some salient points already we have discussed, and like there is a name of the shipper, name of the carrying vessel, full description of the cargo, marks and numbers of identifying the goods, part of the shipment, port of discharge, everything should have maintained. Name of consignee, terms of any agreement or departments, name of and address of the notified party, signature of the ship's master, all they are the salient features. And in the functions of bills of lading, we have discussed already. It has a receiving at the time of shipment of the goods. There are basically four functions. The cargo is termed as a clean bills of lading with no further endorsement. And usually the types of bills of lading are different types. For an example, straight bill of lading, two-order bill of lading, shipped bill of lading, received bill of lading, groupage or master bill of lading, split bill of lading, transshipment bill of lading, thorough bills of lading, etc. These are the different types already we have discussed. Then about airway bill, we can say the transport document in the air carriage is also known as airway bill. And in the combined multimodal transport document, we can say it is a multimodal movement of the goods in container with the document which is known as the combined transport document is prepared. Basically here the movement of goods is usually done by using more than one mode of transport. For an example, rail and sea. Okay. And after that we have also discussed the international contracts. There are different types of international contracts we have discussed. And within that, international commercial terms also discussed, how the different terms, and there are Incoterms, that means there are pre-carriage, main carriage, and on carriage we have also discussed. And there are some terminologies or abbreviation we can say, that means EXW, that means it your ex-worker, CPT, carriage paid to. Please remember all these terminologies for your future purpose. And after that, we have also discussed the rules for domestic and international trade. What are the different rules for domestic and international trade? You know, to survive in a international market or in a competitive environment or in the era of LPG, we have to adopt some strict guidelines, documentations, and everything. And after that, is a guidance note we have already discussed. Then there is some insurance coverage, how it is mandatory now, and how in the Incoterm 2020, there is a clause A, which is basically preferred for the manufactured goods, and in clause C, it is for commodities goods. And there are different transportation terms, or there is after that we have discussed three important cases. That is, one case is incorrect bill of lading, which causes the delays, and case 2 was missing of the certificate of origin blocks for the custom clearance, and case 3 was about incorrect the HS code, that is your harmonized system code, leads to heavy penalties. So from these three practical situations or cases, you can imagine what is the importance of our documentation and the reference rules and regulations. I hope you must have understood the entire chapter. Thank you from my side.